Hello, welcome. This is video number 5. It's the 10-minute video series for Ultimate Access based on the CIMA operational case study for May 2018, Mansako. Mansako produce leather handbags as their main product, and I'm Sandy Hoody, and we're going to look at the IFRS number 5, which has got two parts to it. It's got the discontinued operations part, and it's also got the assets held for sale part. We're looking at assets held for sale, and within the F1 syllabus there's a fairly substantial part allocated to financial accounting and reporting, worth 45% of the OT marks. Obviously that goes down by a third when we're looking at the overall operational case study, but that's still pretty substantial. And here, produce the primary financial statements of an individual entity incorporating accounting transactions and adjustments in accordance with relevant international financial reporting standards in an ethical manner. And here within the indicative content, it specifically refers to non-current assets. So we know that this is a substantial area. It was tested in May 2017 with good results, and the question then was how the specific requirements under IAS 16, property, plant and equipment, and IFRS 5 operation would apply in respect of the vacated factory premises. So interesting wording to this particular question, because really it might lead you to think it's sort of half and half IAS 16 and half IFRS 5. It's entirely IFRS 5 really. It's about a vacated premises and turning it into an asset held for sale from property, plants and equipment. But the examiner's report is normally very rude about candidates' ability to answer F1 questions. So here it was very pleasing that this element of the task was reasonably well answered. Most candidates demonstrated knowledge and ability to apply that knowledge in respect of IFRS 5. Candidates that did not score well here either did so because their answers were too brief, or because they failed to apply the criteria of IFRS 5 to the scenario. So you need to know the criteria of an accounting standard, and you need to be able to apply that. You could imagine some rote learning students remembering what you have to do in order to meet the asset held for sale requirement, and feeling quite proud of themselves as they put it down, and scoring very badly because they hadn't applied it to the scenario. And similarly, you could imagine some other students who just didn't know the standard. So by the time we get to the end of this video, we're going to aim to have both. Here you've got an opportunity to stop the tape should you wish, and show yourself that you know the 5 criteria needed when we classify an asset as held for sale. Here F1 again, the weakest syllabus area. So typically ISs give you a lovely structure, and here we'd be looking at available for immediate sale in present condition, actively looking for a buyer, reasonable selling price, sale is highly likely, sale is to be within 12 months of the classification. So here we have an asset that could be held for sale, and in that way we would be looking at taking it from the property, plant and equipment area within non-current assets and holding it as asset held for sale within current assets. Now there is a mnemonic that can help, 4 letters. I know we had 5 a few minutes ago, but here, if you remember, asset held for sale, then S for sell, A for available, L locating a prospective buyer, E expected. So we're looking at IFRS 5 in the context of Mansako, and really Mansako have got property, plant and equipment which they wish to transfer to asset held for sale. Then all the sale criteria must be satisfied. You can't satisfy just 3 out of 4. And here I'll tell you precisely the examiner's view on this, because I asked her at a conference in front of a large number of delegates. I said, in real life, if the first criteria that I looked at was not met, we would not classify the item as asset held for sale, and we wouldn't even investigate the remainder. She said, yes, I agree, but in terms of the exam, you need to look at all the criteria, so don't simply rule it out because one of them has been missed. She needs you to do them all because that's how her marking scheme will give you your credit. So I know in so many respects these case studies are very close to real life. In this very minor aspect, it's a little bit closer to an exam. So facts, but fact that you wouldn't know unless I'd spoken to her and she'd give me such a categorical reply. Right. Clues that we can get from the pre-scene. Mansako operates a single company-owned distribution centre which is based in Lowland, approximately 10 miles from the factory. They've got a wonderful logistics system with records of the movement of all the products, inbound distribution centre, outbound logistics to stores, and so on. The newly manufactured products are transferred to the distribution centre by road using Mansako's own vehicles. The distribution centre was designed for a mainly stores-based operation, has not received the same focus or level of investment as the rest of the business. So I've highlighted the three key points that I think may well lead to a question, perhaps looking at shutting down the distribution centre. It's a long way from the factory. It's been designed mainly for store-based operation, and it has not been reinvested in over the years, while other parts of the business has. So it could be closed completely and distribution outsourced, or it could be moved nearer to the factory. Here we have it. Mansako may have a site to sell. So let's have a look at a practice question. Hello, finance officer, says Anders Bukati. We've recently acquired a site adjacent to our factory. We will relocate the distribution centre here. As the distribution centre is 10 miles away, belongs to us, we plan to sell it. Please would you prepare a briefing paper which would help the members of the board understand the specific requirements of IFRS 5 in terms of reclassifying the old distribution centre as an asset held for sale as far as our accounts are concerned. So he's written that in such a way that you know that you're writing to people with no financial knowledge. Right. What do we also know about any question? We need to understand the pre-scene, but we don't need to remember the numbers. We need to follow our procedure. So we have 4 steps, the requirements of an IFRS 5 in terms of reclassifying the old distribution centre as an asset held for sale as far as our accounts are concerned. Identify the question, plan the answer, check that the plan is addressing the same as the task requirements, and then quickly write up a series of short paragraphs. Plan the answer using the Word document if you're going to follow my instructions rather than Scratchpad. There's a lot to be said for that. And within this would typically be half of a 45-minute section, so it would be worth about 22.5 minutes or 12.5%. And if you did 8 good paragraphs, you would earn about 64% of the marks. So here we have the word processing document. Straight in, I've written down asset held for sale, then I've written down the initial letters of our mnemonic, sale, and then valuation. I've got 6 pretty good general headings there. Nothing specific yet. Then develop them up. Carrying value recovery. We know about the idea of an asset held for sale, that the carrying value is going to be recovered not through it being used in the course of the business, but by being sold. So we're no longer using it to earn money for the business. Instead, we're using it as something that we want to sell and generate cash from in that sort of a way. There's an intention to sell, the S of sale. It's immediately available, the A of sale, in its present condition, so that we don't have to make any alterations. And again, we can expand on that. So that gives us a chance for another paragraph. So that recognition that if an asset needed to be modified, it wouldn't meet the asset held for sale criteria. Then we're actively looking for a buyer, and that we're charging a reasonable price, which then fits in with that actively looking for a buyer. giving us a chance for another paragraph. The sales expected within 12 months, we know that that is an essential requirement again. And then having looked at the classification, we then can say how it moves within the statement of financial position, that now that we are valuing it at fair value less cost to sell, rather than at the carrying value at the point of the change from property, plant, equipment into asset held for sale. And then it sits within the current assets and it's no longer depreciated. So we made our plan. We looked at the requirements in terms of the reclassification, and we listed 10 headings. 10's quite a lot, and those headings all meet the task requirement. So we can be quite proud of ourselves, and we've done what the process said. We're now at the stage where you would start to write up a series of short paragraphs. I haven't given you my answer this time, but you would have a series of 4 to 5 line paragraphs where you look into the detail of each of those headings. You make your point, it's clear, it's concise, you don't use long sentences. I would say try to avoid even using a comma. Short 8 to 12 word sentences when you make a single point are a lot easier for the marker to understand. Make it absolutely clear that you're writing about the old distribution centre, because the directors will relate to that. If you start telling them all about some dry accounting standard, they will switch off and your examiner won't be giving you as many marks. Develop the point and make sure that you're definitely answering the question. IFRS 5 is one of many accounting standards in F1, and the pre-scene provides plenty of opportunities for exam questions on various accounting standards. Just think of the possibilities. Revise them, yes, and then try to imagine scenarios where you can apply your knowledge, practice planning and then writing up your answers. I hope to see you for the next introductory recording. Thank you very much.